Hello and welcome to ATP Insights, where we cover the tech news that matters most in Asia. Today is Monday, the 16th of February, 2026. Let's get right to it. I want to cover two big topics today. Thailand's top startups, according to the Asia Tech Review, are forced to look overseas for IPOs. I really want to dig deeply into this because I have my own opinions here. And SBI Holdings acquires a majority stake in Coinhako, which is a Singapore crypto exchange. I need to mention before we start talking about that I'm actually on the board of directors of SBI Thailand, but I know nothing about this. I've been given no external information or internal information about this at all. I only know what I read in the news, like the rest of you. Okay, let's talk about this article that was written in the Asia Tech Review. Thailand's top startups are forced to look overseas for IPOs. It's a really strong statement for a headline. Forced? Anyway, the reporting in this article says that leading Thai companies like Lineman Wongnai, and you have to remember, I've been living in Thailand literally since the nascence of the Thai startup ecosystem. I know what Wongnai is. Like Wongnai was meant to be the Yelp of Thailand initially, but for Southeast Asia for sure. And it also says that in this article that BitCub, that Lineman Wongnai and BitCub are seriously considering going public overseas in places like Hong Kong or New York, rather than on the Thailand Stock Exchange. Let's take a look first at where the public markets stand today, because I think this gives us some pretty good context. In 2020, Thailand's stock exchange, the SET, was Asia's second highest destination for IPOs, again, according to the article, with nearly $5 billion raised in 2020. That year put the country on the map as kind of a vibrant place for new public listings. But since then, things have changed dramatically. The SET's performance has declined. It was down around 10% in 2025. More than $3 billion in foreign capital has flowed out of the market. And major stocks, even from traditional large corporations, trade below their listing prices, and we'll get to that as well. And given that backdrop, it's no surprise that founders are hesitant to bring their companies to market where valuations are depressed and liquidity is weak. And just so you know, I worked at Morgan Stanley in Tokyo for a long time. I also worked at Goldman Sachs and a bunch of other companies there, and I traded the Thai stock market. At some level, companies that are outside the main indices, that are outside the main index, liquidity ends up being a problem. That's just a fact. And don't get me wrong, I love Thailand. I live in Thailand. I wouldn't want to live anywhere else in the world right now. But the stock market has had some problems in the last year or so. We know this for sure. This is public information. You can see it in the market. And liquidity has always been a problem for some of the non-major stocks. And liquidity is always going to drive price action as well. If you can't buy and sell a stock in size at a particular price, which is what kind of determines a stock's liquidity, it's just going to be hard for that stock to have any kind of actual value, right? Because it's going to be hard to trade, and people will trade places and in names where there's more liquidity, so they can get in when they want. They can buy when they want, and they can sell when they want to sell. This is why liquidity really matters. Let's talk about Lineman first, and let's call it Lineman Wongnai. This is meant to be, this is one of Thailand's most visible tech success stories. They have millions and millions of users in a country with 70 million people approximately. Almost everybody has a cell phone, so smartphone penetration in Thailand, super high. There are plenty of people that I know that have multiple smartphones. One is for business, one is for family. There's a lot of smartphone access in Thailand and smartphone distribution. Now, according to this article, Lineman Wongnai is a unicorn. It's a private company. And I don't know when it ran its last round. I'm not saying it's not a unicorn. I'm just saying I don't know what makes it a unicorn right away. Right. And this company's biggest revenue streams are all in Thailand. Got it? So Lineman was meant to be kind of an offshoot of Line, the messaging app, right? And Lineman itself only has about 10 million users. I use Line all the time. But to be fair, I've never used Lineman. I guess a lot of people do. I can't comment on it as a super app. And to be fair, one of its biggest competitors, Grab, I don't really use Grab as a super app either. I use Grab to book a motorcycle taxi or sometimes book a taxi to the airport. So I don't do a lot of food delivery, but that's what Lineman is. And it merged with Wongnai. And Wongnai, just so you know, is meant to be, as I said earlier, the Yelp of Thailand. It was just a community built site where you could leave recommendations, take pictures of yourself at these restaurants. And over time, they kind of merged these two things together where the Wong Nai team, I believe, took over Line Man, if I remember correctly. So the CEO now was the founder of Wong Nai, which again, in and of itself had been a very successful company. I can't comment on the profitability of this company because I don't have enough information. But it has said before that it wants to go public, originally looking at 2025 for a Thai IPO. And to be fair, I'm an investor in another company that I don't want to mention its name, that potentially was thinking about going for an IPO in 2025 as well. Well, 2025 has come and gone, and that company also did not IPO. But this has been, according to this article, this IPO has been postponed to, for unfavorable market conditions. Again, I'm not giving stock advice. I will say this on this show often and on a global tech podcast as well. I'm not in the business of giving investment advice. But I think to say that it has postponed its plan due to unfavorable market conditions is burying the lead. Okay, what do you really need to have an IPO? Well, you want to have consistent profitability. You want to have consistent expected, clear growth paths, right? And you also want to have a retail market environment where people actually want to invest in companies, but also trust the larger companies that are in the local stock market, wherever it gets listed, so that they have overall confidence in the stock market itself. And I think a lot of these factors put together mean it's just going to be difficult for a company like Line Man Wong Nai to do an IPO in this market, but not just because of the market conditions. To be fair, Central Retail Corporation, right, which is part of the large Central Group, one of the 5 or 6 biggest companies in Thailand. The retail corporation, so CRC, did an IPO in 2020. But even a big, well-funded company like that is still trading well below its IPO price. And as I said earlier, if big sort of institutional grade, very profitable, very well financed, very well funded, big balance sheet companies are having problems keeping their stock prices above their IPO, it's not going to give great confidence to much smaller companies with much smaller revenue base and frankly, much less stable growth opportunities in a market, right? It would be strange for me to see Wong Nai, Line Man Wong Nai, grow in Indonesia. Indonesia has its own version of Yelp. And in Vietnam, which is a completely different market, right? So you're going to have to work within the confines of the Thai market and then list in Hong Kong is what this company is thinking, or New York. Here's my take on this, right? This shift tells us that, so they say that they're going to make a final decision in the first half of 2026. And my hot take on this right away is that it's not going to happen. They may do a SPAC, right, like Grab did, but go back and take a look at the performance of Grab SPAC. And again, love Grab, use it every single day. I don't use it as a super app. I just use it as a way to book transportation. Very effective, very efficient. It works well for me. That's great. But just go do your work and look at the performance of Grab SPAC. I was looking at it on Yahoo Finance today. When I clicked the overall tab, it said it was down something like 65% from its highs. Okay, so I think this shift is telling us something really important, that Thai founders prefer markets where investors understand tech businesses and are willing to back growth, even if that means leaving capital on the table locally. But I will say this. In the old days, particularly where retail was a large part of local markets, not necessarily just in Thailand, but in the old days, it was possible, well, and for institutional investors as well, to kind of not force people to buy the stock, but to heavily encourage them to do it. One, on an institutional side, as a favor. Remember, I worked on a portfolio trading desk at some of the biggest financial services companies, foreign financial services companies in Japan. I sat on equity desks. I know how these IPOs work. I know how institutional clients get treated and how they participate in IPOs. And I'm telling you, if you took this IPO into an institutional grade and even like a sophisticated retail grade investment environment in New York or in Hong Kong, I mean, I'm just telling you what I'm thinking. Again, I'm not giving investment advice. It's unlikely that based on the numbers that these companies are driving, but also the size, right? People want to invest in companies with billions and billions of dollars in revenue and potential, 20% growth year over year. But the numbers have to be big to get everybody interested. Let's talk about BitCub as well, because this also was mentioned in this article in the Asia Tech Review. And let's get some context here too. BitCub was founded in 2018. Again, it's one of the most famous Thai tech companies. It quickly became Thailand's dominant crypto exchange. There were a couple of other ones which we don't really want to mention because they were shut down for, I don't know, again, go do the math. They were shut down for potential regulatory reasons and also liquidity reasons. At one point, BitCub had 90% of market share. I think right now it's probably closer to 75 or 80% market share. And back in 2021, SCB, one of the biggest and most sophisticated banks in Thailand, agreed to buy a majority stake, valuing BitCub at more than $1 billion in what would have been a breakthrough deal for tech in Thailand. That deal was canceled in 2022 after regulatory complications, according to the article in the Asia Tech Review, leaving some bittersweet memories and an unfinished path toward a domestic exit. Let's just say this. They also did an ICO. Okay, they did an initial coin offering. They issued a token. Yeah? I don't have a copy of the chart here, but go back and look at the performance of that token. Watch it trade normally, spike like crazy around the announcement of the potential merger or purchase, and then watch it get killed. Just watch it. Anyway, so BitCub might pursue. I remember back then it was the potential valuation of the company was $1 billion. I think the investment was going to be a $500 million investment. We can go back and check the tape on that. But now again, according to the Asia Tech Review, BitCub might pursue an IPO in Hong Kong, with figures discussed around raising $200 million, which would be cool if they could do that. Right, and the significance here of actually accomplishing this is twofold. Right, BitCub has long been one of Thailand's most successful tech companies. Fair enough. Started in 2018, so not that old. Seen pretty good growth, right? They do fintech, digital assets, and consumer access into all these products. But the local market has not provided them with a clear path to IPO, particularly after the deal that they had with SCB kind of got killed in 2022. So its decision to explore foreign listing just underscores how domestic regulatory and market conditions can shape the strategic destiny of these tech companies. But again, let's be clear on this. Sophisticated investors, particularly when they have a choice of, do I invest in a company that's China-based, has access to 1.4 billion or 1.3 billion, depending on whatever China's population is, right? Or a company that has 77% or 80% market share in a country with 70 million people. And we'll talk about what's going on in Hong Kong anyway in a moment and how it actually has become, according to this article in the Asia Tech Review, the leading IPO market in the world, bigger than New York. But what gets us here? So I think there's a mix of a bunch of things. Major listed companies have underperformed, right? So key floats, I already mentioned this, like retail giant CRC, Central Retail Corporation, and some of the other ones too. I think one of them was PTT, I can't remember, remain below their IPO prices. When liquidity dries up, when retail investors stop participating in the market, when younger investors age kind of into the position where they would have a job, have investable capital, and yet they're not in the stock market, this actually becomes a problem. So investors, what they do, foreign capital looks at that and thinks, where can I get a bigger bang for my buck from an investment standpoint? And they say, maybe it's not here. So investors shift to higher growth markets, or even to flight to safety. Right? I'm not saying they're bringing all their money back into the United States or back into Europe or back into Japan, but you can see in the publicly recorded numbers that retail investor interest in the Thai stock market is lower than it has been historically. And some of the biggest companies out there, again, well capitalized, well balance sheeted, right? They're performing below their IPO listing numbers. So that's going to make local exits much harder to achieve. And to be fair, overseas markets like New York and Hong Kong offer advantages that other big markets can't. Like I said, deeper capital pools, more sophisticated public investors who understand tech and digital native business models. And I think this is a double-edged sword for both of these companies, because these investors in Hong Kong and New York, both on the institutional side and on the retail side, actually do understand the way these businesses work. When they get the audited financials of these companies, and they're going to have to get them all in English, right? Because otherwise they're not going to be able to make the proper IPO and investment decision. they may find that just the revenue isn't big enough. They may find that. I don't know. I haven't looked at their balance sheet and their income statement. But if they're having a problem listing in the local markets where, again, according to this article, the idea is that the retail investors here are not as savvy and not as advanced as they would be in Hong Kong and New York. I think once savvy investors start looking at the numbers here, Lineman Wang and I can do whatever they want, and BitCub can make the most convincing IPO story. They can go on a roadshow, sure. But I think at the end of the day, these are going to be hard sells. And again, I'm not making investment advice, but even if they do actually accomplish an IPO, let's see what happens to their stock prices. And just as an aside, we are in Asia. We're proud of what happens out here. In Hong Kong, recently overtook the New York Stock Exchange, the NYSE, the venerable New York Stock Exchange, as the world's leading IPO destination in January 2026, driven by large tech listings and some local market reforms that could capture emerging sectors, right? And here's the thing. The Chinese economy, whether it's growing 8% a year or 0% a year, is still generating massive numbers. And if those Chinese companies go to Hong Kong to list, it's going to make the listings there way bigger than anywhere else in the whole world. So why does this matter beyond just like Lineman Wang and BitCub? Well, first of all, let's just talk about this. You live in Asia, you live in Southeast Asia, you're watching this show, you've heard me talk before. What's your favorite Thai startup that was started like in the last 5 to 7 years? Or as the kids would say, 6, 7. The last 6, 7 years. What is it? The one that's been hyped up in New York, the one that's been hyped up in the Wall Street Journal, the one that's been hyped in the Straits Times in Singapore, right? The one that's been hyped in the South China Morning Post. Give me 2. 2 new ones, right? Because Lineman and Wang and I have existed forever. BitCub has been around since 2018, so maybe, no, it's more than 6 or 7 years out there. I'm just going to keep throwing 6, 7 out there. I don't know why the kids do it, but I guess it's the right thing to do. But why are IPOs important for any startup ecosystem? Well, when local companies go public, they actually put capital back into new startups. Founders are really prolific investors. They're like, wow, I can't believe I made X millions of dollars. I'm going to take some portion of that and help my startup ecosystem get bigger and better. Because by definition, I wouldn't say it's a less stressful way to make money, but start up a company. I dare you. Take the risk. Take the leap of faith. Quit your corporate job and go out and start a company from scratch. It's hard. Those are hard yards. And a lot of times, founders, either they have good ideas that they now reinvest their own money into those new ideas, hire different teams because they're in different sectors, or they start taking that money and placing it in other startup and founders' pockets so that they can grow their companies and the whole ecosystem grows as a whole. So if there aren't any exits, whether it's corporate acquisitions or IPOs, it's problematic for the entire ecosystem. It also proves that business models for local investors work here, right? And as I said before, here's the thing. If you're a venture capitalist, and most of the big VCs are based in Singapore, there are some kind of scattered throughout the rest of the countries in the region, but most of the big ones are domiciled in Singapore. But if you're raising a $150 million fund or you're investing out of a $300 million fund and you're just not getting an exit 7 to 8 years in, it's going to be hard to raise your next fund. I mean, this is why the funds in the United States, whether it's Sequoia or Andreessen Horowitz, right? Some of these other big funds in the US, right? Draper, they can raise money relatively easily because by and large, every single one of the funds that they've raised has had 1 exit or 2 exits that are big enough, either acquisitions or exits that are big enough to return the whole fund and then return money to investors who say, I don't want that money back. I'll take some of it, but I'll give it back to you to then go put that back into the market. So this is a problem, right? If there are no exits, you have to ask yourself a question, then how do you encourage people to give money to VCs, to become angel investors, and even for startup founders, as I said a few minutes ago, to leave their corporate job and start up a company if they don't think there's ever going to be a financial return for them in the form of an exit? Okay. And it also, from a talent standpoint, means I want to work for a startup. It's exciting. I can also get a huge return if I get early stock in the company. But if you're just cranking it out, and even if you're making an at-market salary, the idea was you'd make above-market returns for yourself as a coder or whatever you're doing, as a marketer, whatever you're doing, or sales in this startup. It's going to discourage people from actually joining startup. Now, there's some question in my mind as to whether these listings are actually going to take place or even become successful if they do. But let's say they do. Okay, if the winners leave Thailand to list abroad, we can categorize these companies any way we want. The local market and the local exchange is going to lose narrative and lose momentum, which means that other companies are going to watch that. If they see a successful exit or IPO in another market, even if the company is local, they'll go and do the same thing. And then you don't have all this sort of virtuous circle stuff we talked about before, right? And that's just bad. And one of the Thai VCs, he used to be a VC and now is a founder, actually summed it up pretty bluntly. And he said, local VCs have largely given up on Thai exits, and you can hardly give them fault for that data. It's not to say that these markets are dead, but boy, I just think it's going to be hard. Let's see if these companies can actually accomplish, just get these things listed, and then let's see what their performance looks like. But I'm not holding my breath. That's my hot take for today. Okay, let's move on to our second and last topic for today. And let's talk about SBI. Again, just to mention, I'm on the board of directors of SBI Thailand. I have no inside information on this. I didn't know about this until the news hit. So I know nothing more about this than what I've read in the news, just to be clear. Give me a sec. It was reported that SBI Holdings is acquiring a majority stake in Coinhako. And I think this is actually significant. This is a really great story, actually. I think this is one of the biggest strategic moves in Asia's digital asset space this year, that SBI intends to acquire this majority stake in Singapore's leading crypto exchange, Coinhako. And I don't think this is just like another acquisition. I think it reflects a broader evolution in how traditional finance firms, so TradFi, I'm going to use that term again, traditional finance, TradFi, are positioning themselves to acquire DeFi, so decentralized finance companies, and how the future of money, finance, and cross-border digital services are going to evolve. Let's just set some context again so we know who's who here. SBI Holdings is one of Japan's largest integrated financial services group and one of its most innovative as well, with banking, securities, insurance, asset management, and more under its umbrella. Over the past decade, SBI has positioned itself as a pioneer, and I think it's not just positioned itself, but it has become a pioneer among TradFi firms, so traditional financial firms, in embracing blockchain, digital assets, real-world asset tokenization, and stuff like that. It's invested in crypto ventures to operating SBI VC Trade, one of Japan's largest crypto exchanges. It's in the exchange business. It knows how this works. It feels like a natural extension, but we'll get to that in a second. And Coinhako, very straightforwardly, I've actually been past their offices. I'm trying to remember which street it's on. It's on a cross street in Chinatown, if I remember correctly. It's a Singapore-based digital asset platform founded in 2014, and it has grown into one of Singapore's most trusted crypto exchanges, licensed under Singapore Payment Services Act and regulated by the MAS, which is the Monetary Authority of Singapore. And that's not easy to do. The MAS is one of the world's most well-respected regulators. And I'll tell you, this is one of the things I love about Singapore. The regulatory frameworks that are put in place there are strict but fair. And the regulators have a reputation of being very, very forward-looking and working at speed. So as new assets come online, they try to learn about them as fast as they possibly can and try to figure out a way to make their markets fair and balanced while still allowing innovation to take place. And that's why the fact that Coinhako is regulated by the Monetary Authority of Singapore gives it gravitas. This is a tight regulatory environment, but that still allows and supports innovation. So why would SBI want to do this? It's got a gigantic business in Japan. Why is it making a strategic bet on a Singapore crypto exchange? Let's figure this out. Well, it wants a strategic foothold in Asia's most significant crypto hub. Right, I've already talked about it. It's emerged as a leading regulatory hub for crypto and digital assets in Asia. Its framework, I said, balances innovation with investor protections, all the things that you would want from a regulator. Like, again, I'm not going to say this enough times. The MAS is amazing. And it attracts both regional and global players. So SBI gains regulated access to one of Asia's most sophisticated crypto markets. This is really important. If you're a big believer in the future of crypto, Web3 tokenization, and real-world assets, you want to be active in the region's most active hub, its most important hub, its most significant hub. And Coinhako has a platform with deep local liquidity, a significant user base that includes both retail and institutional customers, and an operational hub that complements Japanese existing ecosystem. This is more than just an expansion. Look, the relationship from a business standpoint between Singapore and Japan has been longstanding, and it's been very effective and very beneficial to both countries. And you may say that SBI is establishing a bridge between Japan and Southeast Asia, but what I would say is it's actually establishing another lane. It's building another lane on that bridge that's been built for the last 60 years. Yeah, that's what I think. SBI has been committed in Japan to building a kind of next-gen financial infrastructure. Kitao-san, who is the founder, Yoshitaka Kitao. Kitao-san, I've been in his office. Again, I've been all the way up in their headquarters in Tokyo, and I've been into his office. Kitao-san's a serious, well thought of CEO and leader. Again, very forward-thinking, very innovative. And he has publicly described this move as part of the group's vision to create a global corridor for digital assets and next-gen finance. From SBI's perspective, because again, they think about this in a way that's integrated, they're not just talking about trading crypto coins, right? That's not why they're doing this. They want to talk about tokenized assets. They want to talk about real world assets. They want to talk about Web3 at scale. And they want to have more access to stable coins. These are digital currencies. If you don't know what a stable coin is, it's a digital currency pegged to fiat. It's becoming more and more widespread, and it's used for payments and settlements. And this is the way you have to think about a stable coin. If you issue $1 billion in stable coins, it's backed by $1 billion. You have to have the $1 billion. There's no margin. But in some cases, I can say, well, this option trades for $1 billion of Apple shares, but I only have to put up, let's just say, 100 million. There's no margin here in stablecoins. $1 billion of stablecoins is backed up by $1 billion. Okay, and Coinhako's existing infrastructure, user base, and regulatory standing give SBI a really, really good base to explore these possibilities across borders. Now, here's the thing. Coinhako has spent over a decade refining its trading platforms, its risk systems, and its compliance infrastructure, and again, working with the MAS to make sure that it's completely compliant and that the infrastructure that it's building around that compliance is actually significant and good. For SBI, this means no matter how big their infrastructure already is, if they were going to build this again on their own in Singapore, they'd probably have to build it from scratch. And in this case, because they're acquiring a large portion of Coinhako, it means they don't have to build from scratch. And they can just bring balance sheet muscle, client relationships, institutional networks to scale Coinhako's technology and service offerings more quickly and more broadly than Coinhako could have done on its own. And like I said, SBI brings the balance sheet and the institutional access, and Coinhako brings the regulated platform and the market experience, particularly if you believe in the merging of the DeFi, decentralized finance, and TradFi worlds, traditional finance worlds. And I think that's part of what's happening here. SBI is looking out to the future and thinking, what is it going to look like in 6-7 years? See what I just did there? Okay. One of the biggest challenges in Asia's financial markets has been fragmentation. We talk about this all the time. The region itself is huge, but every individual market is not necessarily that big nor that liquid. Fragmentation has been a real problem. Different regulatory environments, different currencies, and different financial norms. And this acquisition creates an opportunity potentially to facilitate cross-border crypto flows between Japan and Singapore, two markets with pretty good liquidity, very sophisticated investors, and wealthy populations. And then it allows both of those countries. If you think about all the products that SBI already has, imagine then taking all those products and using the infrastructure of Coinhako to turn them into DeFi-style products based on some TradFi knowledge and understanding, plus the institutional gravitas that we already talked about when it comes to SBI. The other thing is harmonizing compliance and operational standards between jurisdictions, something I talk about very often, particularly in a fragmented market like Asia and Southeast Asia. If you're operating in 2, 3, 4 markets, and remember, the SBI trading business, separate from their crypto business and their Web3 business, operates in Hong Kong, operates in Indonesia, operates in Thailand, and operates in Japan. So they're already across multiple markets, and they want to do the same thing in the crypto space. And Jamie Dimon famously said years ago that like crypto is just a scam. And now JP Morgan runs one of the biggest stablecoin businesses in the world. And they also have trading desks dedicated to crypto as well. It's almost like when Steve Jobs said like nobody is ever going to watch video on an iPod, and then boom, came out with the video iPod, and now you can watch video on your iPhone and on your iPad like it's going out of style. So you have to think about it in that context. Coinhako is not just a retail exchange. It serves institutional clients handling large trading volumes and offering custody services. Institutional participation is key here. It's essential for digital assets to move beyond niche markets. And with SBI entering here, you're basically sending a signal to big institutions that TradFi, traditional finance, is serious about crypto as an asset class. And again, that's what JP Morgan has done in the United States and to a certain extent in Singapore as well. But having SBI come in and having like the financial muscle of what's going on in Japan, this could definitely accelerate liquidity, product development, and regional adoption. And the final thing here is just like the regulatory credibility with a compliance-ready platform for Coinhako. As I've said before, is just key, right? So why does all this matter? Let's just summarize this really quickly. If you boil it down, the reason why SBI wants to acquire Coinhako is strategic regional positioning in a regulatory hub, building infrastructure for the future, for tokenized finance, for Web3, for RWA, so real-world assets, and combining capital and technology to scale quickly. All this stuff like really, really matters. Let's see where this goes. But like I said, I think this is one of the most significant moves in the combination of traditional finance and decentralized finance that's happened in 2026 in Asia. Okay, that was a lot to cover today. My name is Michael Waits. Thank you for watching ATP Insights. Please follow us on all the socials, on X or Twitter, depending on how you want to look at it, on YouTube, on LinkedIn, and on Instagram. And look for us again next week. Thank you again. Subscribe and hit the bell so you can get notifications when new videos drop. Thank you.